What's up everyone, and welcome back to Explain the Charts. Today is November 13th, 2025, and we are diving deep into Litecoin, ticker LTCUSD. We've seen some absolutely massive volatility over the past week, so we have a ton of news to cover, followed by a detailed breakdown of the charts. First, let's look at the headlines, because Litecoin has been making some serious waves. Multiple outlets are reporting that LTC has reclaimed the key psychological level of $100. This move was fueled by what's being called an unprecedented on-chain volume surge of over $15 billion in a single day. This suggests massive liquidity and a huge spike in investor engagement. Adding to the bullish sentiment, data from Sentiment shows a 6% rise in wallets holding over 100,000 LTC, indicating that large-scale investors, or whales, are accumulating. This isn't just retail excitement. Institutional interest is growing, with inflows into products like the Canary Litecoin Spot ETF. Furthermore, the CFTC's designation of Litecoin as a commodity is providing much-needed regulatory clarity, which is always a positive for broader adoption. Analysts are also bullish, with some calling for a potential move towards $140, citing this renewed strength and technical breakouts. However, it's not all smooth sailing, as some reports highlight dominant selling activity and profit-taking, questioning the sustainability of this rebound. So, we have a classic battleground scenario, strong fundamental news clashing with potential profit-taking pressure near recent highs. Now, let's see how this news translates to the charts. Looking here at the full daily chart for LTCUSD, we can see the broader picture over the last year, which paints a clear story. After a significant drop in early August, where we bottomed out near $50, Litecoin spent months consolidating in the $60 to $70 range. This long period of sideways action effectively built a strong base of support. Then, in early November, things absolutely exploded. We can see this massive green candle on November 7th, a jump of over 17%, which lines up perfectly with the news reports of a major surge. That single move broke us out of the long-term consolidation range with immense volume, which is a very bullish technical signal. Let's zoom in on the action just from this month to see the story more clearly. After that initial 17% pump on the 7th, we saw a couple of days of consolidation before another leg up on the 9th. This is where we broke past $100 for the first time in a while, ultimately reaching a high near $113. The price then pulled back, finding some temporary support around $104 on November 10th before making another push. Yesterday, November 12th, was a very telling day for the market. We saw price push up to a high of over $104, but sellers stepped in aggressively, pushing the price all the way down to close around $97.58. This created a long upper wick on the daily candle, which often signifies strong selling pressure and can be a sign of a potential short-term reversal. It shows that while bulls are trying to push higher, bears are actively defending these levels and taking profits, confirming what some news articles were suggesting. To get an even better feel for this recent price action, let's switch to the 15-minute chart. Here we can see the moment-to-moment volatility in extreme detail. Look at the massive, high-volume run-up on November 9th that took us to the peak, followed by the sharp rejection from those highs. The price tried to reclaim those levels several times on the 10th and 11th, but failed to create a sustainable new high, which can be an early sign of weakness. The major sell-off on November 12th is very clear on this time frame, showing a sharp drop from around $104 down to the $95 level in just a few hours. Right now, the price appears to be finding some short-term support in the $95 to $97 range, which aligns perfectly with one of the support levels mentioned in our news summary. This $95 to $97 area is now the most critical level to watch in the immediate short term. If buyers can hold this line, we could see another attempt to push higher. However, a clean break below this level could easily signal a deeper correction is on the way. Now, just for some historical context on how Litecoin tends to behave, let's briefly look at the 1-hour chart from late October. Here we can see the price trading in a very tight, low-volume range between roughly $92 and $97 before it made its bigger move. This pattern of quiet consolidation followed by a volatile expansion is characteristic of Litecoin's price action. What we're seeing now on the shorter timeframes could be the beginning of a new, higher-level consolidation range, or it could be a distribution phase before a move down. The key difference now is the significantly higher trading volume compared to back in October, which adds much more weight and importance to the recent moves. Coming back to our daily chart for the long-term perspective, let's talk about what could happen next. The bulls have a lot going for them. A clear breakout on high volume, strong on-chain metrics, and growing institutional interest. For a continuation of this bullish trend, buyers need to establish a clear support level above the old resistance, ideally holding strong above $95, or even better, reclaiming and holding above $100. If we can hold these levels and build a new base, the next major resistance target is the recent high around $113, and then the $118 to $132 zone mentioned in the news. Bears, on the other hand, will be looking at that rejection candle from November 12th as a clear sign of bullish exhaustion. They will be looking for a breakdown below the current support range of $95 to $97. If that level breaks, the next major support area to watch would be around $92, and below that, the high dollar ADS, which was the key resistance level before this entire breakout began. A drop back into the dollar ADS would be a significant bearish reversal and would largely negate the recent breakout. So, to recap the important levels, immediate support is at $95 to $97. Stronger support lies at $92, and then the high dollar ADS. Immediate resistance is the psychological $100 to $102 area, followed by the recent high around $113. The major overhead resistance target for bulls is the $118 to $132 zone. Now for a few unbiased predictions. Scenario 1. Bullish consolidation. I'd give this a 60% probability. The price chops around between $95 and $105 for a few days, absorbing the recent selling pressure before attempting another leg up towards $110 plus. This scenario is reinforced by the strong fundamental news and on-chain data. A daily close back above $102 would significantly strengthen this outlook. Scenario 2. Bearish correction. This has about a 35% chance of occurring. In this case, the selling pressure continues, we break below $95, and the price corrects down to the low $90s or even high $80s to retest the original breakout level. This would become much more likely if we see continued weakness in the broader crypto market or a daily close below $95 on significant volume. Scenario 3. A sharp V-shaped recovery to new highs. I'd put this at a low 5% chance. This would be an extremely aggressive bull case where the market ignores the recent selling and immediately pushes for new highs above $115. It's less likely given the clear rejection candle, but still possible with the current market excitement. Keep a close eye on daily closing prices relative to the $100 and $95 levels, trading volume on both up and down moves, and of course any new developments regarding spot ETFs. And finally, a quick disclaimer. Please remember that this analysis is for informational and educational purposes only and should not be considered financial advice. The cryptocurrency market is extremely volatile, and you should always do your own research and consult with a professional before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next one.